Welcome back, everybody. About 44 minutes after. Companies have had to adjust their strategies to manage through the volatility in oil prices since oil hit an intraday record back on July 11, 2008. What a year it's been. Maynard Holt is co-president of Tudor, Pickering, and Holt, an energy investment and merchant banking boutique based in Houston. Holt previously spent 13 years as an investment banker and managing director in the Natural Resources Group at Goldman Sachs. Maynard, good afternoon. Nice to have you on Bloomberg Television. Hey, it's been a crazy year for the price of oil in the energy markets. What, if anything, have we kind of learned about the oil market over the past 12 months?
Well, I think we've all been reminded of volatility, just to cite the obvious here. We went through a period in the first half of 2008 where everything worked. Prices kept going up. Commodity prices kept going up. Stock prices kept going up. The markets were there for you. The capital was there for you. So the first half of the year was an embarrassment of riches, and then kind of, just like that, if you'll forgive the analogy, the tap turned off and everything shut down. Prices started going down, capital markets closed, and all the assumptions that you'd built your business on for many years running, you suddenly had to question. And that's gone on for a while, and we're obviously still in a period of big volatility, so it is a difficult time to manage an oil and gas business.
As you know, in the Wall Street Journal, I think Gordon Brown of the UK and Nicolas Sarkozy of France, they wrote about how they're saying that we kind of need a regulator or greater regulation of the energy markets. They talked about that volatility, saying when it's too high, it's not good for the global economy and for consumers, too low, and companies, they're hesitant to maybe make the investment that they need to make sure that the tap, as you said, kind of keeps going in years to come when the demand gets greater. So where do we go from here when it comes to the energy market? Let's talk about regulation. Do we need greater regulation?
Well, I probably hang around my free market buddies too much, but when you hear government regulation or intervention, I think all of us in energy land are not instinctively drawn to the conclusion that that will help the problem. There are clearly areas where government regulation is useful. I don't mean to dismiss it, but when you think about prices and the signal that prices give, even if they are volatile, natural gas in the United States is a great example. A few years ago, we were saying natural gas in the United States is in short supply, but prices were high, and U.S. companies went out and found a lot of natural gas, and they've really changed the energy equation in the United States because of that price signal. And I think if government regulation, even if it's aimed at diminishing some things which contribute to volatility, if government regulation diminishes the price signal that the markets give, that will ultimately diminish our ability to go out and find more oil and gas.
All right. In terms of speculators, though, let me ask you, is it important to kind of have some speculative component to the energy market? And having said that, do you think there's too big a component when it comes to speculators?
Well, I don't know what the right sort of Goldilocks level of speculation is, but what I will say is that this past year is an excellent example of massive volatility in the oil and gas business. And the one thing that allows you to run your business, make commitments, decide you're going to commit capital to certain projects, one thing that really helps you do that, particularly if you're a smaller company, is your ability to go out and hedge. And so big, deep markets that you can lay off commodity price risk to help you manage your business, help you keep people employed, help you keep the rigs going. And so hedging is an important part of the business, and it's an important part of managing what is otherwise always going to be a volatile business to a certain extent.
Maynard, we only have about 40 seconds left here. You do spend a lot of time with companies who have to deal with the volatility that we've seen in oil. How are they able to withstand that volatility, or can they, and are they?
Well, the way I would put it to you is, most of our clients in years gone by, what was very important was production growth, and that's really what investors cared a lot about, and it's what companies cared about. What has become very important in the last year is obviously your stability, and that means your size, and that means your liquidity, and it means your borrowing capacity. It means the diversity of your asset base. And so when companies go through what we've been through here, if you can imagine it, if you work in the finance staff at an energy company, this has been one heck of a tough year because you've had to figure out how to keep the company running with so many markets, falling away from you.
And we've just got about 10 seconds here. You think people or companies should be going people long? Just explain it quickly. And like I said, we've only got a few seconds here. Well,
for years, the problem in the industry has been, how are we going to get enough people to do everything we need to do?
Okay.
When you go through a world we've been through now, it's tough to know how to hold on to all those people.
Got it. Yep, it is a predicament. Maynard, thank you so much. Maynard Holt.